The Bank of Zambia just recently increased the MPR, and it's gotten everybody talking. But it's not the first time that the BOZ has increased the MPR, nor is it the last. So what does this mean for you as a borrower, for you as an investor, and for all of us as citizens in Zambia? This is what I'm going to talk about in this video. And if you've subscribed already, a million thanks to you for subscribing to my channel. But if you haven't subscribed and would love to continue seeing videos such as this, subscribe to my channel by clicking the subscribe button. It is at the bottom, it is down here. Click subscribe right now. And also don't forget to share and turn on that bell icon, because the bell icon is important for whenever I am live or whenever I release a video, you'll be alerted automatically, and you're going to be informed and up to date in terms of the investment news in Zambia. And now let's get started. I would like to start by looking at what MPR is. What is the monetary policy rate? So the MPR is the base interest rate that the Bank of Zambia regularly reviews, on which financial institutions also depend on. So in order for you to borrow from the financial institution, they refer to the MPR, which is the base interest rate as set by the Bank of Zambia to determine the interest rate on your borrowing. But it's not just on your borrowing. This MPR is also supposed to affect your savings and deposits. So the interest that you earn on your savings account as well as fixed deposit accounts are also supposed to be affected by the MPR. But in Zambia, we normally don't get to see an upward increase in our interest rates on savings and deposits, and it's quite frustrating and pretty sad. So that is what the MPR is. And when the MPR is revised upwards, what it normally means is that financial institutions will also revise the interest rates on your loans upwards. And when they do this, what happens is that the prices for goods and services go up, because the businesses are automatically going to transfer this cost to the consumer. So you might wonder, why is the MPR reviewed regularly by Bank of Zambia? The MPR is reviewed regularly by Bank of Zambia because it's dependent on the economic performance of a country. So if the economy is doing well, inflation is coming down or within their target range, like for Bank of Zambia or Zambia's target inflation rate is within a range of 6 to 8%. So their aim is to try to bring down inflation to this range. But where the economy is performing badly or not as expected, and we see inflation is increasing away from the target range that the country has set, you see the central bank coming in and implementing control measures such as increasing the base lending rate, as we've seen in the recent past in Zambia. So when they do this, what happens normally is they are intending to bring down inflation, because they are making borrowing expensive. It means that there'll be little money in circulation for you to buy goods and services. And therefore, the demand for goods and services will reduce, resulting therefore in a reduction in inflation. So that's the overall intended objective. The other objective is to attract foreign investment into the country. So when interest rates are raised, the government is expecting that foreign investors will find Zambia attractive and therefore bring foreign currency into the country. And the third point really is to spur economic growth. So because inflation has been brought under control within the range that they want to, or close to the range, this is intended to spur economic growth. But the question really is, does increasing the MPR result in all these benefits? And you and I can actually attest to the fact that this is quite far-fetched, and even though the central bank implements this measure, the increase of the MPR, it is not a magic wand to controlling inflation. This is because inflation is affected by external factors such as the increase in fuel prices or even the increase in the production of goods and services, we saw the effect of the drought in terms of our economy in Zambia. So these are factors that are beyond the control of the central bank. And therefore, there's very little they can do using the control measure of increasing the MPR to bring inflation down in the short term. However, it is expected in the longer term, perhaps 12 to 18 months, we are meant to see some positive impact as a result of this measure of increasing the MPR done by the central bank. In the short term, however, the increase in the MPR has an adverse effect because of the increased costs of borrowing that are later on transferred to the end consumer, resulting also in an increase in the prices for goods and services. So you could say it actually has a counterintuitive effect on the prices for goods and services. But then, how does the increased MPR affect you? One, as a borrower; two, as an investor; and thirdly, as an individual. And what should you do about this? So this is what I would like us now to discuss. And if you are any one of these three, which you should, if you are not a borrower, if you are not an investor, you are definitely an individual or a citizen resident in Zambia. What are your views? How has, the increases in the MPR in the recent past, or even just a few years, affected you personally? I would like to hear your views in the comment section below, particularly how it's affecting you and your livelihoods. So now let me look at the impact of the increased MPR on you as a borrower. So for those that are fortunate and have gotten loans from financial institutions in Zambia, what you find is that Zambia, our loans are basically normally based on a variable interest rate. So variable interest rate simply means that the interest rate changes depending on the MPR. So every time the central bank revises the MPR upwards, you expect to see a similar revision from your financial institution on the interest rate that they are charging you on the loan that you've gotten. If the interest rate on your loan goes up, it means that your debt obligation goes up. The amount of your loan increases as a result. So what should you do in circumstances where the MPR is increased? What you need to do is sit down with your financial institution and consider two options. It's either you increase the amount of money that you are paying towards repayment or settlement of your debt. If you increase the amount, for example, from 5,000 to 5,500, it means that you will reduce on the principal amount in the longer term, and it will be less costly for you in future in terms of managing your debt. Second option is to increase the tenure of the loan or the period of repayment. This is appealing particularly to those that are facing cash flow constraints. So rather than increasing the amount 5,000 to 5,500, what you could say is, I will maintain the amount I've been paying, or even reduce it if you like, but I'm going to increase the tenure of this loan. So instead of, I was meant to repay it in 2 years' time, let me repay it in 2 years, 6 months' time. But what this results in is a bigger debt obligation. There's an increase in your overall debt if you extend the tenure of your loan. But then the choice really is up to you, depending on your cash flow situation. But it's very important that you sit down with your bankers and analyze what option is suitable for you and your current financial situation. So for borrowers, if the MPR is going up, it will result in an increase in the interest rate on your loan, which will affect the amount of your debt. Now let's look at the increased MPR rate on you as an investor. Now, many of us that watch this or follow this YouTube channel are investors. So when we see the MPR going up, what does this mean for you? So I would like to look at this from two angles. the impact on your short-term investments and the impact on your long-term investments. So when I say, how does the increased MPR affect your short-term investments? I'm referring simply to savings and fixed deposit accounts or even treasury bills. What normally should happen when the MPR goes up? It should affect both the interest rates on your borrowing as well as the interest rates that you make from your savings and your deposits. But what normally happens is we don't see the revision upwards in terms of the interest we're supposed to be earning on our savings and deposits in Zambia, and this is quite unfortunate. So yes, when the MPR goes up, your savings and your deposits might not follow suit, and they may actually be earning you interest below the inflation rate. So you need to seek out alternative investments for if you're looking at shorter term investments. Compare the interest rate that you are earning with treasury bills. They may give you a better interest rate rather than the savings or deposit accounts. And also shop around. Financial institutions are different. So you might be banking with a financial institution that is giving you a reduced rate, or a rate that is not comparable to other financial institutions. So shop around and find a rate that is at least beating inflation rate. Inflation right now stands at 15.8%. So if you're able to earn on your fixed deposit a rate above that from your financial institutions, that is better. So shop around and find a financial institution that can offer you an interest rate that is suitable for you, and also even just the number of times they pay you that interest income. Is it monthly? Is it quarterly? Is it annually? Is it biannually? You need to figure out those things as well. So that's for short-term investments. What's the impact on long-term investments? When I talk about long-term investments, I'm specifically referring to GRZ bonds, shares, as well as property. So for bonds, it's pretty interesting. When we see the MPR increasing, we're supposed to see a corresponding increase in the coupon rates offered by competitive bidders during the auction. So for example, the auction that will be taking place in November this month, 2024, with the increased MPR to 14%, we are expecting to see the coupon rates to at least be above what was offered last month. This is because of the increased MPR. It works similar to the way the banks operate. Immediately the MPR goes up, you see the news, the financial institutions publish in the newspapers the revised increase in the interest rate as a result of the increase in the MPR. We're supposed to see the same from the bond. So the people that participate in the auction are supposed to offer interest rates that reflect the market. But it was really interesting to note that October had a different effect on the coupon rate. Rather than the coupon rates maintaining the market rate or even going up, looking at the projection, we actually saw the coupon rates coming down for a number of reasons that I discussed in a video that you can watch up here. And so this is why the October results were pretty interesting. I hope you understand now, because when the MPR goes up, we expect corresponding reaction in terms of interest rates on our savings, borrowings, as well as investments in GRZ bonds. So where we see coupon rates that are being offered lower than the market rate, we need to ask questions as to why that is the case. But of course, the reason that was given even by the Bank of Zambia governor in their MPC briefing was it's the increased demand that resulted them in earning a lower offer in terms of the coupon rate. And so that's the effect on bonds. For shares, the effect is that because of the increased costs in terms of interest rate that the businesses have to repay back, it might have an adverse short-term effect on profitability. And so it could affect the amount of dividend that you are getting, because the company may declare lower dividends because of the reduced profitability as a result of increased costs in terms of interest repayments. That could be the effect on the shorter term. But also for shares, what would happen is the business could also revise their prices upwards and transfer the cost to the end consumer. So it's a mixed reaction in terms of how shares respond to the increase in the MPR. And property as well also has some kind of mixed reaction, because with property, the demand, we expect because of the increased MPR and individuals, households, businesses not having as much income or reduced income, because they are now diverting that income to financing interest repayments, what it would mean is there will be less demand for accommodation and rental property. But then again, for you as an investor in real estate, all you could do is increase the rental fee as well. And as a result, you're also transferring that to the consumer or the tenant. So that is how you would respond to that. So for an investor, these are the impacts. So for you as a smart investor, no wonder we talk about building a portfolio of investments. I know many of you have heard me talk about bonds a lot of times, but I actually also advocate for a diversified investment portfolio, meaning you need to tap into all areas of investments. Because if one aspect is not doing well, the other one can always pitch in and help you. For example, inflation-protected investments, such as we've mentioned bonds, if they're working correctly as it should be, perhaps property as well, those will come in and help you in times of high inflation. So build a diversified investment portfolio, tap into shares, tap into real estate, tap into GRZ bonds, tap into gold, metals, others talk about cryptocurrencies, which I'm not so familiar with, and I'll be spending a few hours perhaps next year to actually understand a lot more about cryptocurrencies, and if they can make part of the investment portfolio. So that is how this increased MPR affects you as an investor. What about the effect on you as an individual? You may not be a borrower, you may not be an investor, but you're just a Zambian citizen. So what happens when the MPR is increased? The intention of BOZ is to reduce the inflation down. So the borrowing goes up. It means that there's reduced money to spend, because now you have to basically spend money on financing the loan. So because we expect prices of goods and services also to go up, it means that your food basket is going to be affected. The amount of kwachas that you would have spent a month or 2 months ago to finance a budget for your family might not be enough going forward as a result, particularly in the short term, as I've earlier indicated. So for you as an individual, really it's about managing your finances well, finding areas where you can reduce unnecessary expenditure, reducing on wants, in terms of expenditure that goes towards your wants, and also increasing your income. So taking on extra jobs so that you increase your income. This is the only way that you can survive harsh economic periods as we've been going through. And this is how the MPR affects you as an individual. Now, going forward, do we expect this MPR to continue going up, or what is going to happen? Mukonki, what is going to happen? So what I must tell you is the GRZ through the BOZ targets an MPR of within a range of 6 to 8%. That is very ambitious. Right now we have inflation rate at 15.8%. So for us to come down to that range, it's going to take a lot of work. And it's work that is perhaps even beyond the control of the GRZ and Bank of Zambia. In the long term, if the government wants to reduce the inflation rate and also impact the appreciation of the Zambian Kwacha, we need to focus on revamping the manufacturing sector. So manufacturing, ensuring we have a lot of exports. That way we are able to drive in the much needed foreign currency into the country. Which is why it's pretty exciting to see the developments in the mining sector. Just a couple of days ago, yesterday, we saw the president officially opening copper mines and gold mines in Northwestern Province. And we've seen a number of mines that have restarted production in order for them to contribute towards the 3 million metric ton copper production that the government is aiming to attain in the future. And so that is the way to go. But rather than just looking at the mining sector, we also need to ensure we empower manufacturing through SMEs, and ensuring that SMEs really become the true engines of the Zambian economy. That is the only way we are going to see a better economic performance in terms of inflation, as well as stabilization or even reduction of the Zambian Kwacha in terms of ensuring that the Zambian Kwacha actually starts performing better again in its major currencies, particularly the United States dollars, in terms of appreciating it. And so in the shorter term, we expect the MPR to continue going up because we have not yet reached that level of economic performance in terms of exports as well as manufacturing in Zambia. But hoping that everything that the government is doing in the longer term is actually going to help change this trajectory. I don't know what your views are, so let me know what you think about the entire MPR development. How has it affected you? And is there anything else that I've left out that you would like to contribute towards this discussion? I would really love to hear from you. And if you found this video useful, don't forget to give it a thumbs up, to share, so that others can also get to understand how this increased MPR affects them. And also don't forget to subscribe to my channel by clicking the subscribe button. It is at the top, it is up here. Click subscribe right now. Thank you so much for watching and see you in my next video.